Welcome, everyone. Thank you so much for joining us today. Our guest is Ryan Day. He is joining us from Alberta with Calvert Home Mortgage Investment Corporation. And today we're going to be talking about financing flips because Calvert has a really unique product that I was really excited to learn about it for my clients, my friends, and myself. And I thought everybody would love the opportunity to learn more about Calvert's financing opportunities as well. So today we are going to be doing quick welcome and introductions. Ryan is going to do his presentation. We'll have a Q&A period at the end, and then I'll be back just to do a short wrap up. Just a reminder for those of you, I know we're 2.5 years into like heavy Zoom usage, but just a reminder that I love to use the Q&A box at the bottom. So if you have a question for Ryan, please use the Q&A box, and we'll keep the chat box for banter back and forth, comments, that kind of thing, interacting with each other. And just a reminder, in the chat box at the bottom, it will default to hosts and panelists. So if you put in a comment, obviously, that says hosts and panelists, Ryan and I are the only ones who will see it. So please make sure you click the drop down, change it to everyone, and then we'll have a great time interacting and keeping the conversation going while Ryan is busy teaching us a whole bunch of cool things. So my name is Elizabeth Kelly. I've been a real estate investor for longer than I care to admit at this point. I've done pretty much all the strategies out there, but my love always is rent to own. I was an elite trainer for Rich Dad for 8 years, and I've spent the last 4 years as a coach and a mentor. And I'm also a business owner and entrepreneur. So it's been a wild ride, but a ton of fun. And I'm really grateful for the opportunity to be able to spend time here with all of you. Ryan, of course, is joining us from Alberta, and he is in business development with Calvert Home Mortgage, focuses on creating strategic partnerships with real estate professionals. And Ryan and I had a great time chatting about sort of his foray into the world of real estate investing and all the amazing things he's learned. So in the last year, Ryan has helped help investors finance over $30 million in flip and BRRRR projects, which is super cool. Ryan also, of course, if you're in Alberta, you got to do something on the slope. So snowboarding is his sport of choice and loves learning about personal finance. And we are going to hop on over to Ryan right now. Thank you so much for joining us today, Ryan. It's such a pleasure. You and I figured out we have a connection from way back, so that's always a great thing to discover. We appreciate your time and look forward to learning more about Calvert Mortgages and how you can help us.
Fantastic. Really appreciate the intro and really appreciate your time as well as everyone else's time on the call. It means a lot and really excited to be here. We're all good. You can see my screen. We're ready to rock.
Perfect. Yep, we're all good.
Fantastic. Well, great to meet everyone. My name is Ryan Day, as mentioned. And the core focus of today's presentation is going to be on our niche product, primarily focus on people who flip properties or implement the BRRRR strategy in Ontario and then also in Alberta as well too. So we really focus on short-term lending with this niche product for people who flip and implement the BRRRR strategy. So a little bit of background quickly on us is, so we're a MIC, which stands for a Mortgage Investment Corporation. And we've been a MIC since 1982. Just most recently last year, we lent out $320 million in loans on 875 properties. Also last year, really excited to announce that we just got a new credit facility from BMO and ATB in order to essentially help us lend out more money on really strong loans. The focus of our lending is short term, ideally 6 months, a year maximum. Typically for our loans, and ideally they have very strong exit strategies. So whether it's flipping, they sell the property once it's complete, or working with a mortgage broker to help with the refi once the renos are done. And our mission is to be trusted advisors, offering an effortless experience for the personal and financial success of others. A few other key points about Calvert. So we've been in business for over 45 years. We've been working with real estate investors for those 45 years. So we really understand your business and your needs, just because the owner, how it originally started was he was a real estate investor and he wasn't able to get funds after a certain amount of properties that he had. So he decided to pick up private lending to help out his other real estate investors friends in order for them to secure more flip deals. So really cool kind of background story on how Calvert got started in order to help real estate investors build their portfolio. So getting into kind of the meat and potatoes of what makes Calvert different from, you know, all of the 100 other different private lenders that we do have, obviously in the space, is just really that short-term focus. So we are essentially able to commit to deals that are time sensitive. So whether they're closing, you know, say if it was Wednesday or Thursday, or even tomorrow, if it was in Alberta, we have in-house legal administrators who create and prepare all of the mortgage documentation. So this significantly reduces the turnaround time for transactions to close when they're at the lawyer's office. So because we have that unique ability for preparing all of the mortgage instructions for the lawyers, it significantly reduces the turnaround time for lawyers to close deals, which obviously helps borrowers like yourself if you do have a time-sensitive deal on the table. All of our valuations we do internally in-house. So as long as the property's 4 units or under, we have currently right now 3 candidate in-house appraisers who will value the property as is, or if you're doing renovations, as complete. So they'll essentially, we have MLS access for pretty much everywhere in Ontario and Alberta. So they will pull comps, taking into consideration your renovation plan. And I would take that to our appraisers, and they will pull comps on what's recently sold, taking into consideration your renovation plan, in order to value the property as if complete. Those valuations are completely free as well. And the turnaround time for them is approximately 24 hours. So what's awesome is obviously you save around $500-600, but with how hot the market's currently been, it obviously saves you, you know, maybe about a week, 2 weeks in some instances, and in really hot markets, for not requiring an appraisal. We do have voicemail. I know it says no voicemail there. However, so if you call the main line in the office, if I'm not available, if any of the other underwriters aren't available, there's always going to be one person. So you never receive voicemail for the time sensitive deals that you do have. So someone's always going to be available to chat with you through your deal. If you do have an opportunity that you'd like to capitalize, that falls into your hands. As mentioned before, this is in Alberta only. We do offer in-house signings. So don't need to go to the lawyer's office. We do all of our paperwork internally in-house. And if you do have a deal that is in Calgary, you're able to close in-house, typically around $300, but you save on legal fees as well too. So those are only for Alberta. That's why the little Q there as well for individuals on this call. And last but not least, we have no renewal fees. So we draw up all of our commitments for 6 months fully open. We renew for another 6 months as long as the borrower is in good standing. So pretty much as long as you're making mortgage payments, the property's still insured, we renew for another 6 months. So in total for 12 months that you're able to have a fully open mortgage for with Calvert Homes. A few of the different lending solutions that we offer, just have them broken down right here. So in Alberta and Ontario, we have flip financing. So it's a little bit different in Alberta with only requiring $10,000 down. I have a slide coming up that outlines all of the different pricing tiers depending on how much you are looking to put down for your down payment. Really focus on the BRRRR strategy as well too. We underwrite those loans a little bit differently. We really want to validate the exit strategy of how strong the borrower is if they are looking to BRRRR. So we'd work with a third party mortgage broker, or if you're working with a mortgage broker that you obviously have a current relationship with, that's fantastic. So we just obviously want to understand debt service ratios, credit, income, and just validate that there are no issues with refinanceability once the renovation's complete. And anything short term, so bridge loans, someone's not familiar with a bridge loan, it's essentially you have a sale of a property coming up and the 2 dates don't coincide with the possession of a new property. So you need money short term. Typically it's a few weeks, sometimes a few days to a few months. We focus on those loans too. And then Alberta, do some debt consolidation, a little bit of equity takeout, construction mortgages before in the past too, with spec mortgages there. But we are starting to shy away from those just because our bread and butter is the flip financing. We understand it. We're experts in that space. Are the defaults are only 0.25% on our book for our flip financing. So it's very, very secure. And it's where we're able to essentially offer the most value for our borrowers, having these really short-term loans for people who flip properties. I'd highly recommend, if anyone's interested, primarily in Ontario as well too, if you do take a screenshot of where we lend. I know this is definitely a very hot topic whenever you speak to lenders, is definitely understanding where they lend. So essentially in Ontario, as long as the population is 10,000 and above, we will lend in that city. Our main focus is major urban city centers, so populations above 100,000. However, if the population does have that minimum 10,000 requirement, we will lend there. So essentially, the first question we'll be asking our borrowers is, what's the address of the property? We'll type it into Google Maps. So essentially, we'll type in, using an example, Sault Ste. Marie population. As long as it meets that requirement, we're good. Using another example, so as long as it has a population 10,000 of 100,000, sorry. So we'll use Aurora, for example. So we will lend within 25-kilometer radius of Aurora or Newmarket, for exactly. I know you're there, Elizabeth. So it doesn't need to be right in the city center. It can be a little bit out. So specifically 25 kilometers for a population of 100,000, or 10 kilometers radius for a population of 50,000. One thing to note is we don't have a minimum loan amount. So if you are looking for, short-term loan for hypothetically, let's say 50,000, we are able to approve those. However, one thing to take into consideration is definitely the cost of the capital. We have minimum lender fees, which I'll get into the next slide, but our minimum lender fee is $1,500. So you definitely have to take that in consideration, depending on how much capital you're looking to borrow and what the effective interest rate would be for such a small loan amount. The most we'll lend out on one property, though, is $2 million. So if you are looking at, say for a 4-unit building somewhere in London, for example, that might meet that criteria, we will be able to approve that, obviously subject to due diligence. The most we'll lend out to one individual before we build a relationship is $2 million. So say if you're looking at a few different properties, the mortgages are around 400 grand. The max we'll lend out to those individuals will be $2 million for starting out. Once we've built a relationship, they have a track record, we bump that up to $5 million, subject to due diligence and a credit review with our board of directors. One thing we have noticed in Ontario as well is individuals obviously are always trying to be tax efficient. So we absolutely love lending to corporate borrowers. I do have a slide coming up the next little bit here on documentation that we require for corporate borrowers. So obviously a great way to mitigate taxes in some instances in order to help with your flipping. The focus of our lending is single family detached homes, as mentioned in major urban city centers. And we have a really unique product where we only require $20,000 down in Ontario for purchase prices up to $800,000. Anything above a purchase price of $800,000 will require around 10-ish% down. A few of the different underwriting criteria and variables for those loan requirements is essentially understanding the borrower, the project, the scope of work, if they owe taxes, the location, verifying proof of funds, and a few other factors as well too. We do lend up to 80% loan to value in first mortgages and up to 75% loan to value for second mortgages. We are able to get extremely creative as well too. So let's say that you have a portfolio of properties. Using a really easy example, say you had a property worth $1 million. Obviously 75% of that's obviously 750,000. Say if you had a mortgage for 500 grand. In this example, we'd be able to use this property as collateral at 75% loan to value, and there'd be $250,000 in equity that we'd be able to tap into. And we could essentially use that to, number one, reduce rates. We consider that 250 like cash, Calvert cash, that could be used towards a down payment, or we could advance you funds for the renovation. So if you do have a property or a few properties that you are willing to put up as collateral for your flip projects, we can use that in order to reduce rates or advance you money if needed as well too. So terms, rates, and fees for flips / BRRRRs. So we do have it broken down here. It's based depending on what province you're looking to invest in. So on the left-hand side, we have Alberta rates. On Ontario, off to the right-hand side here, we have our rates displayed there. I know it can be extremely daunting and really hard to palate that 15.5% interest rate. One thing to note on that as well, though, is that is an annualized rate. On a monthly basis, you'd be paying around 1.29% per month. The typical time we see our borrowers in these loans for is around 4 to 6 months. So it's never typically actualized at 15.5%. Another thing that does make us unique and a little bit different is other lenders, say if you had to put 20% down and you're only able to capitalize on one opportunity, if you had to put the 20% down and have the renovation costs as well too, with us, we don't focus too much on debt service ratios. So let's say if you had 3 opportunities or 2 opportunities that you're looking to do in Alberta, you really leverage that 10K down. Now you're able to capitalize on 2 opportunities while also having funds for the renovation, as opposed to having put 20% down on one property. So you are able to essentially diversify a little bit and not have all of your eggs tied up in one basket, so to speak. For one opportunity, you are able to, capitalize on several. Some of our top flippers are doing around 10 projects at once. So they really focus on scaling up using that minimum down, as long as they have a really strong exit strategy, they have experience, and obviously they have the capital to do so. All of the payments for these loans are interest only, so they are not amortized. They have no renewal fees, as mentioned, and there's no prepayment penalty. The quickest payout that we ever had was 2 days. So the borrowers literally charged 2 days interest plus our lender fee. It's industry practice for private lenders to have lender fees on all of their loans as well too. So our minimum lender fee, as mentioned, is $1,500. They change a little bit from Alberta to Ontario. Ontario, our lender fees are 2%, and that's capitalized into the mortgage. So on closing day, you do not pay that up front. It's capitalized into the mortgage, meaning you pay that lender fee when you sell the property or refinance. So definitely one thing to note as well too is trying to always help the borrowers with not getting into these loans with needing a bunch of capital in order to close. And then for those individuals who are familiar with wholesalers, we lend the wholesale fee or the assignment fee. So let's say a wholesaler has a property under contract for $300,000. They have an assignment fee of $20,000. We would consider the $320,000 the actual purchase price. So let's say that was in Ontario, for example, the borrower would only need to put $20,000 down, and then we would advance the $300,000 on closing. Using another example, say if the wholesaler had a property under contract for $750,000 and they had a $50,000 assignment fee, so that would still meet our minimum threshold for the $20K down product. So in this example, the borrower would only need to put $20,000 down, and we would advance $780,000 on closing day. Whereas other lenders, from what we've heard, you need to pay the assignment fee on closing, and some of those assignment fees can range anywhere from 5 to a few that we've seen have actually been in 6 figures. So it can be quite capital intensive, and just puts another wrench in trying to solve the problem of closing on these off-market properties that typically other lenders don't really like to touch. But we understand the business model. We definitely understand and appreciate that those uninhabitable, significantly distressed properties are where we find our borrowers making the most money, where they're able to go and do cosmetic renovations. Sometimes they're tearing down walls. Sometimes they're doing duplex conversions in order to make it the highest and best use for that location. So more than happy to lend on these uninhabitable properties and help you support your business for flipping. We always like to typically show an example. So this was essentially a before and after. And for those real estate investors who are looking to essentially build a case study, we love hopping on calls, doing interviews, doing postmortems from once the project's complete on, what did you learn? What would you do different next time? Any insights, tips, advice that you would share for other people who are looking to get into flipping or who would be able to capitalize and leverage your key learnings on what would be done different going forward in the future. So love sharing knowledge. We post these on our Instagram. Feel free to follow us at Calvert Home Mortgage _ in order for just being updated with our tips for flips, top insights. So in this example, I believe this was in Windsor I want to say about a year ago. So they purchased for $365,000. They had a down payment of $20K. They spent $48,000 in renos. They were in and out in 120 days. And then obviously these are the before and after photos here. Specifically with this loan, they just obviously leveraged that $20K down. The interest rate was at the highest at 15.5. Was fully open. Our commitment fee or lender fee on this was just under $7,000. And these were essentially the numbers. We have a really phenomenal tool called the Flip Analyzer that I'll just pull it up right now. And I populated the numbers that we just saw in that case study in the Flip Analyzer, so you can see what the numbers look like in real time. All tools that we share with all of our borrowers and mortgage brokers. It's on our website, and it involves all of the variables that you'll find when flipping a property. So in this example, we have all of the costs associated here with purchasing. So we have legal fees. Borrower for Calvert Home Mortgage in Ontario pays for the private lender's legal fees. We always have $3,500 to $100 baked in here on essentially a worst case scenario. Typically, it depends on the number of borrowers, the number of properties, if they're borrowing in a corporation, if there's any corporate guarantees, that will affect the legal fees. But we always recommend just having baked in here $3,500. All of our loans require title insurance. We also have land transfer tax baked in here. So this will obviously populate depending on what your variables are down here. We have all of the costs associated with selling a property. So you'll see that this updates in real time. We populate $600,000. You'll see the realtor fees change as well too. Legal fees, if you are going to get a second appraisal. So we have all the costs baked in here. So you're going in to these deals with eyes wide open. And we absolutely love, we would almost consider it being an advisor. So if a deal isn't profitable, we essentially populate all the information into this Excel spreadsheet. And if we see that the borrower is losing money, we essentially ask them like, hey, what are you seeing in this property that we aren't seeing? Maybe they weren't too clear on their detail for the renovation summary. They were going to use high-end finishings as opposed to, maybe market average or below grade finishings as well too. And then, as you can see on the right-hand side, we have baked in here $500 for operating costs. We're probably going to have to adjust these going forward in the future, just with obviously how inflation's going, but also property taxes, insurance. So from what we see, we can always populate these as you see fit. Obviously, if you're going to be flipping a condo, you'd have to populate condo fees. So in this example, they rent out for 3 months, took them 1 month to sell, $48,000 in renovations, sold it for $535,000. What's really cool about this tool as well too, I'll zoom in a little bit. And if you don't understand what each box means, for any box that has the right triangle there, there's a brief little summary just kind of explaining what that variable is. So in this example, these were the monthly mortgage payments. So around $4,600. The total interest costs per day, so on a daily basis, they're paying around $150 in their mortgage. So the total interest costs for this for 4 months for their mortgage payments is $18,500. Total financing costs, so this includes our financing fee of $7,900. The total financing for this deal is $25,430. So we like to be extremely transparent. This is what you're going to be paying. It's very black and white. There's no ambiguity on what you're going to be paying for mortgage payments. So for this specific deal, this is the summary of the capital required for this project. Where did those funds go? So 42% of the capital required for renovations, 26 for selling, 22 for financing, and then you have operating purchase costs here. So in this example, the borrower was required to have just under $97,000. So we need to verify $97,000 in funds. And I know you could be kind of scratching your head like, okay, they're only putting $20K down. They need 50 for renos. Like, how are you coming to pretty much $97,000? So in order to prove a loan, we need to see that the borrower has capacity from start to finish for our loans. So in this example, there's around $8,200 in purchase costs, primarily for land transfer, tax, and legals. You need to see they have money for renos, down payment, and enough to make their mortgage payments for 4 months, as well as operating costs for 4 months as well too. So this will pre-populate depending on the variables you input for renovation, your budget, purchase price, and down payment. So in this example, the borrower made 50% ROI for the cash invested on an annualized basis. So on a 12-month basis, it was 174%. So, fantastic returns. One thing that we do like to promote and communicate is with these deals, because they are fully open mortgages, time is definitely of the essence. So the quicker you can get in and out into these projects, the more it's going to benefit your bottom line. So essentially, the more money you're going to make. So in this specific example, the monthly variable cost, so if it took 5 months as opposed to 4 months, they'll be eating into $5,100 in profitability. So if it took 1 additional month, they'll be making 51 grand, call it. If it took 1 month less, so if it took 3 months, they'd be making 61 grand. So this is a really cool template to kind of get an understanding of what profitability looks like, the different variables involved, and how essentially time is of the utmost importance with these loans. We don't want to see you in these loans longer than you need to be. Obviously, it is higher interest. So the quicker you can get in and out in these loans, the more it's going to benefit yourself. So if you are looking to flip or implement the BRRRR strategy, a prerequisite for documentation that we require is going to be a renovation budget. So when we take this, either the MLS listing, or if it's an off-market deal, the buyer's package from the wholesaler, we need to understand the work that you're going to be completing on this property. This is an example that we have in our flip analyzer, so that spreadsheet that I just opened up. And it's just on the 3rd tab here, right down below. So Reno budget worksheet. And the more detail you are able to, provide in these renovation worksheets, the more it's going to, number one, help with our appraiser providing a more accurate valuation. If you leave out that you're going to be, renovating a kitchen, it's going to be high-end finishings, you're going to be putting in countertop, obviously that comes at a premium, as opposed if you're going to leave that out and have, very market. If you're going to have market average finishing. So details of the utmost importance. And then the more detail you provide, it really helps with providing a quicker turnaround time for our valuation. So when they're very clear on what the property is going to look like as complete, they're able to pull comps more easily because they have a really good understanding on what the property is going to look like once the renovations are all done, implemented. One thing to note as well too, so if you do break it down on an itemized list, with the cost here on the right-hand side, we have an unexpected cost down here. Typically, we always have it baked in for 30%. We have noticed in the last probably year or two that obviously there's material shortages, prices are inflating, contractors are in such high demand and it's causing delays if they have multiple projects booked, which can result in longer times to have a project complete. So being as conservative as possible and always basing this on a worst case scenario and never going into it with an optimistic approach on what you think ARV is, what you think the timeline is, always have baked in a worst case scenario. With our valuations too that we complete internally, we are happy to share those with our borrowers. So you can essentially see the comps that we use, the adjustments that were made, if there was a variance in, square footage, number of bathrooms, if one had 2 detached garages as opposed to 1. We're more than happy to share those valuations. And if you are curious and interested, we are able to spend some time in order to educate borrowers on what our appraisers do and how they come to the different analysis that they do have. Obviously, it can be tough to have an accurate depiction on what a property will sell for, especially once we've seen how hot the market is. So we like to use comps that have ideally sold in the last 30 days to use the most accurate value, to use the most accurate comps for our valuation. So submitting a deal, say if everything this looks fine and dandy, you're excited to chomp at the bit. If you have a deal on the table, or if you're just looking to get pre-approved, it's very easy, very straightforward. If you're a mortgage broker, you can submit a deal through Filogix or through email. My email coming up on the next slide here. It's a one-page application that it takes approximately 7 to 10 minutes to complete. We'll be pulling credit to get an understanding of what your credit looks like. We don't have a minimum credit score currently right now. We do understand and appreciate that sometimes life events can happen to people. So as long as there's a story behind, if credit did dramatically decline for a period of time, as long as there's a story behind it, we are just a common sense lender. So we haven't had any issues in that regard. If it's a different narrative and a borrower has never paid a creditor on time, they've defaulted, it's a little bit of a different story if we would lend to that individual. So just kind of thought I would share that little bit of an insight as well too. And your most recent notice of assessments. What we're looking for in your notice of assessments is not so much income. A lot of our top flippers tend to borrow in corporations and then they pay themselves dividends. And we really understand and appreciate that they're trying to mitigate taxes. So they're just trying to show as minimum income as possible. So we are not looking for a super high income. A lot of our borrowers on paper make a certain threshold around, say 50 grand, call it in a specific example. So as long as you have proof of funds and you're all up to date on taxes, the number one thing from a lender's point of view is that you're just all up to date on taxes. And you're all up to date with the CRA, just because it can be a liability for us in a worst case scenario if we did have to foreclose. So essentially be those 3 documents if you're looking to get pre-approved. Once you submit that documentation, we only need that once a year. So once you do all the legwork, we only need it once a year. Everything else is just related to the deal. So say if you get pre-approved this week, you have a deal that comes up in 5 months, that documentation is still good. Then we would just need the renovation plan, corporate docs if you didn't submit it before previously, proof of funds. So that's the tab under profitability in the flip analyzer. We need to see that you have the money to complete these flips, and just giving us a brief summary on the work that you plan on completing, what your business strategy is. Typically, these can be done through the phone as well too, in order to complete a total package. So if a full package is completed, the turnaround time is around 24 to 48 hours. The more time, definitely the better. If you are able to give us, reason being is if it's a really quick turnaround time, we definitely are able to accommodate. However, we will be dropping everything if it is a time sensitive deal. And then typically, not typically, but all the time, the lawyers will charge a premium if it does have a quick closing. So we always try and encourage borrowers to, at least a week before closing is definitely more than enough time on our end, but at least 2 weeks for the lawyers. One thing that is awesome about Calvert is we do have 3 preferred lawyers that we pretty much run all of our transactions through in Ontario. So you won't typically be paying a full set of legal fees. They do come at a little bit of a discount just because we do volume with these lawyers, which is a phenomenal benefit to the borrowers who are looking to flip properties. In Alberta, there's our solution there is a one lawyer solution. So we do have a lawyer represent ourselves and the borrower. So you do only pay 1 set of legal fees only for properties that are transacting in Alberta. On the next slide, more than happy to dive into some questions. So my name is Ryan Day, just on the bottom here. These are all of the different other underwriters that we do have on our team. We're not territorial. So say if you did one deal with Rob and you want to move on to Sherwin, we're not compensated based off of having individual numbers. It's a team number, so we are not territorial by any means on who you work with. If you connect with someone, you want to do build a relationship with them, more than happy to do that. Or if you want to toggle through different underwriters in order to see who you like, then by all means, we're not territorial as mentioned. One last thing to note as well too is as we're growing and expanding, we are looking for new capital. So currently right now we are accepting new shareholders. Only requirement for accepting new capital is that you are an accredited investor. So as long as you meet that requirement, feel free to reach out to myself. One thing to note on that is due to conflict of interest, if you are going to be an investor or a shareholder of Calvert, you can't be a borrower. So it's essentially one or the other. Reason being is essentially if you're double dipping, if you're borrowing money, but then you're also an investor. We just want to keep it very clean cut. And either if you're going to be borrowing money, you can't be an investor, and vice versa. I know that was probably a lot of information to take in. Typically, a few questions do arise, and definitely wanted to make time for Q&A, just because I know there can be some personalized questions based on an individual's experience or a deal that they have. So more than happy to jump through some questions right now.
That was awesome. Thank you so much, Ryan. Really great presentation. A lot of information delivered in a really short period of time. So very much appreciated that. We do at this point have a number of questions, and one of them was actually exactly the same as one that I have as well. So the first one is, the market in Ontario is softening. Are you finding that this is making flips more risky as there is less certainty with the exit price? What are you suggesting to your flip borrowers? Which is basically the question I had, which is, in a market climate like we're seeing right now, how should we be mitigating risk if flipping is our strategy?
Yeah, we always try and advise our borrowers as short term as possible. Typically, we see our loans for around 4 months. If it is a longer term loan, plus 12 months, there can be some risk components to it. So as long as it's short term, the borrower is being conservative as possible with their timeline, having a reserve fund for, worst case scenario. So really having that 30% buffer baked in. It's really tough to say, not having a crystal ball, but as long as it's as most conservative as possible, they have funds for a worst case scenario. We are still seeing, obviously, in this market, people still making really, really phenomenal money, but it's one of those factors that comes with the component of flipping and working through that unknown. But highly advise everyone just be as conservative as possible. Always plan for a worst case scenario.
Absolutely. And I think that making sure that you're focusing on buying as far under market as possible is a tremendous way to mitigate risk. Obviously, in the last year, the last 2 years, we've been seeing people, buying flip properties at pretty close to fair market value. So the deeper the discounts we can find, the safer we're going to be when we're running our numbers, for sure.
Definitely. Totally agree.
Yeah. Next question, which cities or towns are you seeing more activity in these days?
We've definitely noticed a trend, as other lenders, and I'm sure investors have. Obviously, outside of the GTA, we've been seeing a lot of activity in Northern Ontario, specifically kind of Sault Ste. Marie, Thunder Bay, Sudbury, in those markets where there's still high population. Prices are obviously nowhere near what they are in the GTA. Mm-hmm. So just having that lower purchase pricing, rental demand still high, and then rents out there considerably high, considering what the purchase prices are. So we have seen a little bit of a trend there, or even cities that are around 45 minutes an hour outside of major city centers, where the population's there around 10, 20, 15,000. Where it's still, a short commute relative to the major urban city center. Sometimes we can't always support those markets just due to our lending radius of 25 kilometers, but we have noticed a lot of people finding some really good opportunities, and then just off-market deals as well too, primarily through wholesalers, teaming up with wholesalers, putting a bug in their ear, as long as they're, a serious buyer and willing to take action. Mm-hmm. Wholesalers have been phenomenal for finding off-market properties at relatively below market value.
Oh, that's awesome. Okay, good to know. Next question. Nav said, I realize it's probably area and strategy dependent. Generally, do you see better results or profits with higher end finishes?
So what we always promote to our flippers is having market average finishings. Reason being is there's just more demand for the market average homes with market average finishing. So when I first started, what our boss was condoning is seeing the new builds. What finishings are they putting in their new builds? Typically, it's very essentially cookie cutter. You don't want to trend, from our experience and what we see, as being too far out of the norm of the market average. As long as the demand for knowing your market, and if you are in a higher end community, obviously speaking to the type of audience that's going to be purchasing your property. But we see a lot of our borrowers just having the market average finishings, IKEA cabinets, having the very simplistic, gray luxury vinyl plank, very, very bright paints with just, clear, whitish, off-white gray, white baseboards. Typically that look, the market average look, is really easy to offload. The demand's high. But just knowing your market, knowing your audience, who you're going to sell to, who's your end buyer.
Yeah. And I think one of the very basic tenets of flipping is never over improve your property, because you just won't get the money back.
Exactly.
It's really, look at your end user, your end buyer, and kind of what they'd be, what they would expect in it. I mean, obviously, if it's a higher end home, then you're going to be doing higher end finishes than an entry level home.
Yep.
Yeah. Okay, perfect. So Brad said, I live in BC, but I'm interested in doing a flip in Alberta. Do you fund this scenario when you say you're in Alberta and Ontario only? So the borrower is in BC, but the property is in Alberta.
Yep. We do quite a few of those. Seeing a lot of people in Ontario investing in Calgary and Edmonton as well too. So it's wherever the property is located. So as long as the property is located in Alberta or Ontario, doesn't matter, as long as you are a permanent resident of Canada. The funds are coming from a Canadian bank account. It's all where the property is located.
Perfect. Okay. And just as a follow-up on that, Rowena had asked if you would do construction financing in Quebec. And I think the answer to that, based on what you've said, is no.
Yeah, no, unfortunately not. A little bit in Alberta, but starting to shy away from that.
Okay. And so the last question, one that just came in, was, I think you kind of answered this, but for clarity, what is the mix of sources you are seeing your flippers getting their properties from? Like, are the majority of them coming from MLS or from wholesaling?
Yeah, a lot of our top clients are wholesalers. We've noticed a huge influx of people buying properties off market, whether that be through a wholesaler or them doing their own door knocking, marketing, direct flyer campaign. There's been a huge influx of individuals buying properties off market versus the MLS. So wholesalers, if anyone wants to reach out to myself, Ryan at CHMIC, we have around 15 wholesalers that we have partnerships with. More than happy to share that list of wholesalers to get on their buyers list in order to just be updated whenever they have a new deal that comes across their table.
Gotcha. Absolutely. The second part of that question was, approximately what % of market price do you see people getting right now? Like, are most people getting, are there people able to find deals at like 65% of fair market value, or up until recently have people been paying a lot closer to fair market value?
Definitely. It really depends on the borrower. We have a few key clients who are just phenomenal negotiators. And they are literally, in most instances, the wholesalers who are negotiating with these sellers. On average, we notice them can get really good deals. Same with, as long as there has to be meat on the bone for the person flipping the property as well too. Yeah. So as long as they're sophisticated in that regard, they do keep enough meat on the bone for the borrower. We have noticed quite a few people, some of the more novice people as well too, they can overbuy, overlist. And with flipping, as you mentioned, you definitely have to buy right. So whenever we do value the property as complete, we share those valuations and we let borrowers know what the max purchase price is that we would lend on that property if they're looking to make an offer. So we are able to provide that insight before borrowers go making unconditional offers, what our max purchase price would be and what we think the property will sell for as complete.
Perfect. I've noticed during the pandemic too that there's a serious uptick in what wholesalers are asking in terms of their fees. Like when I was wholesaling or working with wholesalers 10 years ago, people would be looking, somewhere between $10,000 and $20,000 on a property. I mean, I'm seeing wholesaler fees now when you work it back and it's $65,000 or $70,000 on a property with a purchase price of 400. So I think a lot of the discounts that maybe were available, the expectations have changed.
I have noticed recently there have been a few price reductions as well too, from some wholesalers. So definitely with the market shifting, I know it's just been absolutely crazy times with what is the fair market value of a price, with how insane asks and prices are going over asks. It's just wild. So definitely think with the interest rates rising, we'll see a lot more not regulated, but just a lot more baseline of typically what hopefully offers are, as opposed to with just them being astronomically over ask and the value's not making sense.
Yeah. Oh, absolutely. Absolutely. And then the final question is, Kuldeep is saying they're skeptical as a newer investor from Ontario trying to invest in Alberta. How or what would you address in this scenario? So I guess sort of trying to piece it together, it sounds like someone is thinking about investing in Alberta from outside of Alberta. Obviously you would be able to provide financing in terms of for them to do a flip, and then you would be able to connect them with wholesalers where potentially they could find properties under market value. Are you able to make recommendations as well? If you have a great realtor that you would recommend for a particular investment strategy or anything like that, are you able to help out in that way?
Yeah, definitely. I have a list of people who we have partnerships with, who are investors themselves, who have years of experience. So more than happy to share that list of investor focused realtors, mortgage brokers, lawyers, accountants, in order to help best set everyone up for success, to ensure that, we're not doing one deal and you're able to build a portfolio over time and build a relationship. So if you want to shoot me an email, then more than happy to make those connections.
Fantastic. Thank you. And, in this conversation with you today, as well as the one we had previous when we were booking the webinar, there's a lot of things that I see about Calvert that show a lot of integrity. And I think, in the world of real estate right now, that's something that's really, really important. So that's something that gives people a lot of peace of mind, hearing that, for example, you won't, if you take someone on as an investor, then they can't be a borrower as well. And, just talking with you about, how much Calvert is willing to invest in their staff and their personal growth and their learning. I think those are good indicators for a company that's been around 45 years and has the right values and integrity. So appreciate your time very much today, Ryan, to come and share more about your company and the benefits of choosing to work with you.
Really appreciate the time, Elizabeth. It means a lot. If anyone has any questions, more than happy to jump on a call and answer them and just offer value and help as much as possible. I know, as Elizabeth said, it's really tough to cut through the noise in the real estate world. So more than happy to just, help out in any way possible in order to just help everyone succeed.
Absolutely. Thank you again. Just do a quick wrap up here for those of you so you can grab hopefully a couple of minutes to yourself before you head back to your workday. Here is where you can find Ryan and myself. If you are looking for reruns of any of my webinars that I've done in the last 3 years, please do visit my YouTube channel. Everything has been uploaded there. All kinds of great information from speakers and presenters like Ryan. My next webinar is going to be on how to reposition a multifamily property. So there's a ton of us right now who are buying multi-unit buildings, and we know that the numbers don't make sense on closing, but the question is, what does that journey look like to get things to a point, 12, 18, 24, maybe 36 months where the building is stabilized. You've increased the income, you've reduced the expenses, you've done some work on tenant turnover to maximize your returns. And I've asked Christian to come back and join us. That's going to be Monday, May the 9th at 7 p.m. And we're going to dive into how to reposition a multifamily property. So think of it as kind of like a BRRRR on a multi-unit, but then we're going to talk about the things to consider, financing and running numbers and all those kind of tricky pieces that, you know, we've seen other people doing it, but we kind of want to make sure that we're doing it the right way. We're not getting ourselves into situations where our predictions are not actually going to come true. So we always want to know as much as we can before we make the commitment. Thank you so much, everyone, for joining us. Thank you again, Ryan, and the team at Calvert for supporting us. This recording, if you missed any part of it, will be sent to you by the end of the week, and then it will be uploaded to my YouTube channel within the next couple of weeks as well. All the best, guys. Have a fantastic week. Thanks again, Ryan. Take care, everyone. Bye-bye.